What's up, everybody, and welcome to the LV Home Experts Show. Just wanted to say to all the fans out there, I do appreciate all the well wishes, all the emails. I want to say thank you for that. But today, on today's show, we got two special guests here. We got Julie Summerlin, and we also have Natalie Bradley with Fidelity National Title. What's going on, ladies? How's everything going?
Great. How are you?
I'm doing excellent. So,
Fantastic.
I want to talk to my co-host real quick, Dan French with Guarantee Rate. What's going on, brother?
What's going on, guys?
How's everything going with you?
Amazing.
Why do you have your mask on half staff?
I came in kind of quick. You know, one of those things like, you know, you're trying to get in here while you can, and I forgot to take it off.
Gotcha.
But it kind of feels good, man. It keeps my chin warm.
Yeah, it kind of keeps it warm, right?
Yeah.
Gotcha.
I like it.
So in today's episode, I want to talk about the title company and why is it so important that you guys get title insurance. We're going to be talking about the prelim title report, title policies, and things that you need to look out for when purchasing a home, resale, or brand new. So I want to get right into this. Julie, why don't you talk a little bit about Fidelity National Title, how long you've been around, and your title, and what is it that you do?
Well, let's see. I started when I was 10 years old.
Are you serious?
I know, I'm just kidding. Well, because I've been at Fidelity for 22 years.
Oh, wow. That's a long time.
Yeah, incredible company. Actually, sitting here with Natalie, we were an escrow team over 26 years ago together.
Yes.
So did a career as an escrow officer, sales exec, where I met you, chakits, about 10 years ago, and been the sales manager for Fidelity the last couple years. And what an incredible company.
And now you are vice president of sales, right?
Yes.
Wow,
correct.
moving up on the ranks.
Moving up. They can't get rid of me.
What about you, Natalie?
Yeah, my journey in this title and escrow world began 27 years ago, which it was 10, 12, whatever, however old we were when we started dating ourselves here. I've been with the F&F families for almost 20 years. So again, what Julie said, you're going to work for the best. That's where you're going to sell, and that's who you're supporting, and we want to support them. The strength, the stability, Fortune 500, all that stuff is what's important, and that's why we are selling the best title company here in town.
So is Fidelity National Title the biggest title company in the U.S.?
We make up the largest. Yeah, go ahead, Jules. I'll let you take that.
In the world, and market share in the United States, yes, with all the brands, yes.
Gotcha. So what sets Fidelity National Title apart from like local companies? Like why would we use you as a buyer versus a more of a local company?
I'm going to say first off, just strength and where, goodness, being in the business so long, going through different cycles, especially when we get into distressed sales. And I've seen title companies come in and out of our market. I've seen some horror stories. I've seen earnest monies get locked up and wires not go out to sellers when title companies fold, and not to scare people, but just the strength standing behind the policy, just the professionals that you work with. I'm just going to say we're the best of the best. So the people make that, but we've got huge strength, and it does matter. People forget about paying claims. Because after our when the crash happened, 08, 09, Fidelity paid a lot of claims. There were a lot of subprime lending going on, just a lot. So it's really something to think about, I think.
So it's better to work with a bigger company that has more backing than basically, just in case if shit hits the fan.
Yep. I like how you said that,
Perfectly said.
Gosh, if I could have just said that.
just make it a lot easier for you guys, for you girls. So I want to get into this. Over in the East Coast, when a transaction takes place, you have a buyer, you have a seller, you have two attorneys. One represents the seller, one represents the buyer. Here in the West Coast, we use a title company. Yep. What's the difference?
I'll take that one. The main difference is we insure from the date of the recorded document, and part of your title policy covers like validity, notary, fraud, all that stuff. So if everybody comes and signs and then the documents get shipped down for recording, there's what we would need gap coverage. And we don't actually offer that in the West Coast. We insure from the date stamp of the deed.
Oh, that's nice. But I want to go back to this, a title company. Kind of explain what a title company is.
We issue title insurance based on the public record search that we do. It involves court records, property records. We do searches on names, liens, judgments, same name, not just property and what's affecting the property, but we have to search the individuals too. So when we do that, we come up with requirements and we issue the prelim. The prelim is basically, we did all of our legwork, we ran the property, and here's what we need to offer a policy.
So how does that process start? Like when a buyer goes into contract, the listing agent sends over the contract. Walk us through that process through the title company.
We kind of call that like a life of an escrow, if you will. And so from the opening and the wire receives of the earnest money, then the clock starts. We open the prelim, we do the search, we generate that title commitment or prelim. They're one and the same. We send those out to the parties so that they can get started on meeting the requirements. We need a statement of information often to eliminate same name liens. We need demand information so we can order those payoffs and lien payoffs and all that good stuff. It tells us if it's in the city or the county. We need to order sewer demands, trash demands, HOAs, 1 or 2. It's basically our punch list to get to the end.
So how do you guys work with the lenders? Like how does the lender get involved? And Dan, also, can you kind of elaborate on that when she answers the question? Kind of like where you get involved and how you guys coordinate with title and escrow?
Yeah, I mean, it's just, like we ordered the prelim. I mean, so I think a lot of people don't understand why title's even involved. It's like all they see on the front part of the transaction is the real estate agent and the lender, right? And they're like, well, what is a title company? What's the difference between title and escrow?
Right.
And how does this all work? So for me, it's pretty self-explanatory to the client as far as why you would have a title person involved. But I don't know, kind of maybe explain to them why title's there and give them how they correspond with us as a lender and the reason why you're existing,
Well, so I think maybe to put it in more simple terms, Chakits, you're representing a buyer.
Yeah.
Dan's doing the loan. You want them, when the day they close, they should be able to turn around and sell it with no problems. Nobody having to claim interest, put a loan on it, put a pool in the backyard, and know that they have full ownership. I guess the days of the handshakes when people bought stuff years ago, that's gone. Everything is of public record, and we are ensuring that. So that peace of mind and a real estate investment, right, is or a purchase is probably the biggest investment somebody makes in their life.
So a buyer is making such a big investment. The reason why you want to have title insurance is so that way you got to understand when somebody buys a piece of property, there are things attached. You got liens and encumbrance. So you want to make sure when you're buying property, you're buying it free and clear. So that's where title insurance policy does come in. And you guys are also a third-party company where the agents, right, the listing agent, and also the buyer's agent is pretty much telling you guys what to do. Am I correct?
Correct. And then we're also, Dan's company they want to know they're in a first lien position. When we close, if they're lending money to a buyer to buy it, they want to know that everything has been eliminated, the seller's old mortgage. And that way, if they had to, for some reason, the buyer didn't pay and they had to foreclose on the property, that they would be in that first loan position.
What is a first lien position?
First lien position is basically that they're the first deed of trust holder. So we've cleared off any other liens, taxes or any of that. Natalie can kind of go into detail of prelim. But anything that has been cleared from the previous owner and we're showing just a clear title, and they are in first position. So any other loans, so your buyer closes and wants to put a line of credit on the next day, put a pool in the backyard, or then it will show up that they're owed the money. They can't sell or do anything without satisfying and paying off that loan. So it's a lender is not going to lend money without using a title company, of course.
So no matter what, you need title insurance, and it has to be free and clear.
Correct.
Could you actually close, Dan, on a deal that the title is not free and clear, let's just say if there was some sort of lien, let me give you an example. Let's just say if there was a solar lien on it, could that borrower still purchase that home?
As far as if there's a lien on it? Yeah, I mean, it depends though. Like, I think for the most part, most lenders want it to be free and clear of title, right? As far as liens. So it just depends on what type of lien though. I mean, there's some things on there like easements, right? And certain things that come on title where it's part of the property. And so you have to like make an exception for it. Now, if it's something where it's money owed, mechanics lien, stuff like that, then you have to get that stuff removed because the lender's not going to say, well, one, I'm not going to buy into this. And then also it could jeopardize lien position if this property owns it. So they always want to go into it where it's just clear, right?
Yeah.
Is that
I think
true?
You're talking like priority position.
Correct.
Yeah. So first priority wants to be the lender.
Right.
You're going to have easements and other things. We call those, they just run with the land.
Yeah.
So they're never going to go away, but they're not superior to your lender.
Right.
Your loan.
Do you guys have a lot of easements come into Vegas?
Oh,
like,
yes.
It's tons, right?
Yeah, we do. We have aviation easements. We have Nevada Power has a ton of easements, the utility easements.
And you buy a property, you already have an easement. Like if you're selling a home and then you buy a home, do you have a utility? Is it utility easement where it's like they go on your property, they can check your meters and all? That's already
so you
included.
have gas, water, you got electric. Okay.
Yeah, that's all set out when the property is originally dedicated, excuse me, or surveyed. And then once you do that, like a dedicated subdivision, you don't have to keep resurveying. You'll get people move in from the East Coast and they'll say, oh, we want a survey. That's not done typically here in Nevada unless you're buying raw land or acreage. And then you got to make sure we have ingress and egress and utilities to the curb or to the base of the property, or where do they bring those in? So, but for the most part, your question, absolutely on your typical Nevada purchase.
Yeah. And it's like, I mean, that's a deed is obviously it's something that's transferred through title. Through property, real property.
And that's a security instrument that you guys hold, right? Just in case if the borrower defaults on the loan. Is that correct?
No, actually the deed is recorded and then mailed. The original is mailed to the owner and for them to hold. You know, it's not really like a car title. I mean, if you lost your original deed, it's
not a bill of sale.
Well, when I say the deed,
it's public record.
I'm not saying you physically hold it. What I'm saying is you guys are the third-party company. Should the borrower not make payments, you guys, through the title company, pretty much hold on to that piece of paper as far as what is broken down.
It's evidence of ownership.
Exactly, correct. And how everything is broken down.
That's what it is.
Now, if the beneficiary decides to file for foreclosed, then they would go through you. You would take a look at everything. Okay, now you would file for foreclosed. Is that correct?
Very close. So they do name a trustee on the deed of trust. So we are often named the trustee. And one other thing that Julie mentioned about the larger title companies, we have trustee departments. You go through smaller, they're going to name Fidelity as the trustee or other trustee companies. So
is that common for escrow companies to be the trustee?
Title companies.
Yeah, I'm sorry. Yeah, the title companies. I'm sorry.
Yeah, the larger ones for sure.
Yeah.
So like the deed of trust is really evidence. It's an instrument that, especially if you're getting a loan, technically though, the client doesn't own the property. It's collateral to the loan itself so that the client will pay for the mortgage, right? And then when it's done, it's passed through what's called a reconveyance, right? And then so that's when they get the full deed to the house. But technically the mortgage owns the deed, right? Is that not true?
Well,
they both do,
right? You have title ownership from the time you go in. You're the title owner, whoever the seller grants
to that first mortgage trust. Yeah.
I think it's just confusing a little bit, right?
Sure.
Yeah, I think we're getting a little bit too technical.
Well, I'm trying to make sure that people understand how they get into that. You know what I mean? So
now let's just say at this point we're under contract. The lender reaches on out to you. What are the things that you need, Dan, from the title company to process the loan?
Well, I mean, we open up a prelim. We get all the information as far as who's the ownership, chain of title, pretty much everything that's included on that property. Make sure that there's no liens and stuff against the property, and then ultimately it gets to a point where we're now bound. We're going into a position where we order their title fees, right? They all have title fees, and everybody's like, well, why would I pay that? It costs money, right? To do a title search costs money. Company's got to stay open. You guys have escrow fees and stuff like that. So we get those fees. We include all of that into the final or the loan estimate or the closing disclosure. So when the client goes to sign, they see that with the final HUD and all the information that's on the property, including everything they're paying for it. So we are just they're the middle person.
Yeah.
They're the ones making sure that the client's doing what they need to do, the lender's doing what they need to do, real estate, I mean, really, they're the ones that's kind of the controller, I call it. They're like the main controller.
Hub.
Yeah, you're the hub because you got an escrow company that's collecting money and all these things that's going on. Then you got on the other side of it's title. They're doing the title search and they're looking for all the information. So I think it's vital to have all these things because as a consumer, it protects you, you know, and I think that's what people don't understand. Why am I paying for title and why are all these things involved? It protects you as a consumer. Why would, like, if you find something on title, that's you're out to get out of that situation, right? You're in contract. Right. If something is not disclosed or something comes up, hey, you know, thank God they were there. And now I don't have.
And think of paying it one time and be protected. It's not like your car insurance you're paying every month. You're renewing your fire hazard insurance each year. You're paying it at the closing, and you're protected.
Now, are like title fees and escrow fees different from one company to another?
Yes,
they are.
And how does that determine? I mean, is it the bigger the company, the less the fees, or?
Really based on sales. They're filed actually with the title insurance division, with Department of Insurance. So everything is so strict. We have to stay really within the guidelines. Filed rate per sales price. We give discounts, you know, for seniors, veterans, first responders. And we had to file all those discounts. It's really heavy. Regulated.
So you guys are regulated by a third-party company then, basically. You couldn't just charge whatever fees that you wanted to.
No, and we have to stay competitive. So everything's going to be pretty much within reason. And you'll have some of the title companies, maybe the smaller ones, come in with a little different fee structure. Some of them bulk fees. I mean, whatever they do to try to be, you know.
So are there a lot of miscellaneous fees that other title companies would charge out there that consumers that need to be aware of that you guys don't charge?
I would say that's a good question because Fidelity, we have the title and escrow fee, right? Recording fee goes down to the county. We don't have additional third party. I don't know what.
I got a question, and you know what?
Extra fees that some of the title companies do charge. They might say, oh, their rates, their title rate's $50 cheaper, but then they have $400 of just
garbage fees, we call it.
Can we say that garbage?
Yeah, of course.
Garbage fees, junk fees. Yeah, we don't have it.
I'm thinking we can say garbage.
Y'all ladies can say shit whatever y'all want.
I get that all the time. People say, "Oh, Julie, I'm taking the deal over here because their escrow fee is $45 cheaper." I said, "Give me the whole closing statement," and then I'll see like $500-600 of other fees, and I'll circle. I said, "These are you're getting played on here." So
now I want to talk about title policy. Explain to us what title policy is, and the fees, and the different types of title policies that are out there.
Typically, on a sale transaction, which is what we're talking about, there's a homeowners policy. Which protects the buyer and kind of what we've always been talking about. We're going to make sure there's no fraud, no liens, no judgments. You know, incapacitation is a big thing, and that's why we have our notary requirements. And so there's a lot of things that go into our company and why we have the paper we write it on, because it is really important. I bring that up. And then that is going to the buyer, and that's protecting them and their interest and their investment. Then the lender wants a policy. So the lender is going to want like a piggyback policy on that to say, hey, lender, you're in first priority position, and the owner's policy is for the owner.
And I noticed those fees roughly range around $1,500 to $1,200 or something like that. Is that correct?
Well, it's off of purchase though.
Is the sales price?
Yeah,
what's the percentage off of that?
It's not a percentage.
I think it just goes off of whatever the price is. I want to kind of go back on something if I can, because you brought up a good point. But so I get a lot of people that always say is owner's policy optional, but it's not. But
It's
I think
required, right?
Well, it's required, but I mean, it's like this. I've had people say, well, they made it optional, and I don't see how it's optional, where I've heard that before. And just explain the difference between lender's policy and owner's policy. Because a lot of people are like, well, customary practices, you know, the seller's going to pay for the owner's policy, right? Mm-hmm. And the lender's going to pay for the client's going to pay the lender. And why do they need to pay that?
It's exactly that. We're giving that buyer the insurance that we did all of our homework, and that the marketable title is available to them, and they're going to have first, you know, they're going to be the only ones on title. Most importantly, who they bought it from had the ability to sell it, and you know, we secured a notary, adequate notary with E&O coverage and all that to, you know, sign them, and everything we have handled is in process as a result of something that fraudulent happened in the past. And so we won't actually handle a sale transaction with just a lender policy. I mean, a buyer could very well say they don't want an owner's, but I don't know any title company that's going to close a transaction without an owner's and a lender's.
We can't issue on a sale a lender policy and put like Dan in a first loan position and not
It has to be concurrent.
So it's
owners.
required then, basically.
Yeah, it's required. And then the piggyback or the lender's policy is significantly cheaper because it's a second position. We've already done all the legwork. We've already done all the title searching. And we're just guaranteeing you're in first position. You're secure knowing we've checked the title. We've checked the taxes are current. You know, there's no other crazy, liens out there or, ex-wives or, trust was signed correctly. Or
100%.
Yeah. So there's just so much that goes into it.
Yeah, and it's always overlooked.
Yeah.
It really is.
Everybody thinks things just flow and title's just there at the end and they're the hero.
Yeah.
But it's like, as much as I'm doing things through the file, title's doing the same thing.
There's a lot of paperwork and back end stuff that you guys have to do.
It's amazing.
You could see our title plant. It's like, golly, there's so many people involved, so many moving parts, and it's this department, the setup department. That from the time they open the order, that's a department, and then it goes to this department, and they do all the searching and the scrubbing and the. Yeah, so by the time we actually spit out a prelim, if you will, like 24 hours later, it's amazing how that happened in 24 short hours.
Yeah.
So,
If you guys have any questions, want to call live in the studio, 702-409-4495. I got another question that's very important. I want to talk about title insurance, okay? And a different type of title insurance, right? Sometimes what I'll get is an email from my client. My client will ask me, hey, this escrow officer sent me for $150 more to increase my title policy. Explain the title insurance and why you should not increase your title insurance policy.
It's actually a 10% premium for that, what we call the homeowners policy. And I highly encourage, just like to give you an example, your basic owners covers about 10 points. And you're going to be just fine with that. But the homeowners policy goes into,
when you say 10 points, what do you mean?
Title insurance, what we've been talking about, just the basic 10. You're going to be in title. The seller had the right to sell it. You're clear. You're good. Okay. But if you're going to be deeding it into a trust, if you're going to be doing a home equity line of credit, there's a lot of things that go in after the fact where the homeowner's policy is going to offer you some extended coverage. And that's exactly what it basically does.
So if I was a rehabber flipping a property, I probably would want the extended. Is that correct? So that way when I decide to sell it, it would be cheaper?
That's a different policy.
Okay, so that's a different policy.
You're going to want a binder policy,
Okay.
and we do issue a binder, and that is actually also 10% over, and then you only pay on the gain.
Gotcha.
So if you buy a house for $200 and you flip it for $300, you only have to buy a $100,000 binder policy.
Gotcha. Now, so let's just say I'm buying a property as a primary residence, and a lot of people ask me, hey, I don't want to put this into my name. And I also don't want to do a quick claim deed because if I do a quick claim deed, then I could literally lose the policy, right, with the title company, right? Will you guys still cover that?
That's why you want that additional policy.
And that's what I'm getting to. So now, would I have to come back to you guys to redo that? Or can I just go directly to the county and do the quick claim deed myself? Or now am I breaking that gap in that chain link in title?
Yeah. Yes to yes. So first off, a quick claim is not really worth the paper it's written on.
Remember that, guys. Do not get that.
No, quick claim is a in the moment.
It's a no.
Yeah, it's an in the moment deed. So today I'm going to give you whatever interest I have today.
Yeah.
And the grant bargain sale deed is going to go back with any interest this person may have, and it has just a little bit more lifeline, if you will.
Yeah.
We're still we're gonna raise an eyebrow to an uninsured deed, periods, unless your attorney did it or a title company did it with that endorsement attached to it. It's gonna raise flags.
Gotcha.
We have the notary question, we have the preparation question, was fraud, there's just so many things if we didn't do it or your attorney didn't do it.
So are you saying that it would probably be best just to pay the extra fee and just get the full coverage for the additional cost?
Yes. In the long run, absolutely.
Now, I want to share one story that I had. I remember, I would say probably about in 2013 when I bought my first investment property. It was only like, I think it was like $12,000. But this property was like abandoned, okay? And code enforcement had put a lien against the property. Did a short sale. We closed on it with Fidelity National Title. After I closed on this deal, believe it or not, I got a letter from code enforcement, and it said like, you owe us like $17,000.
Ouch.
I said, what the hell is going on? So I think it was Kathy at the time was the escrow officer, but I got full coverage. I sent this on over to Fidelity National Title.
You missed something, right?
They missed something. They had to eat the fee.
Yeah.
So I was like, oh my God, I thought I had to pay for it, but she said, don't worry about it. So they took care of it. So that was a learning lesson. So for me, I would rather just get the extended policy than anything.
So you had a title insurance claim.
Yeah.
Basically.
Something was missing.
Exactly.
Searching records. Somebody was owed money. On
So
that property.
that is a good prime example why you want to have title insurance and use a title company and try to get the best title insurance policy as you can.
Because if
Absolutely.
you bought that and just took your own deed and handed money to someone and said, "Oh, looks good. I just looked at county records and went down and recorded," you would have been.
You'd have been eating that $17,000.
Oof, that would have hurt too.
Yeah.
And that property at the time, I think it was only like $12,000 or $16,000. Like that lien was more than what the property was, but I had to put more money into it, so it was a lot more than what it was, though.
Yeah.
Now, let's talk about, you have the Alta, I think it is, and the CLT, I think it was, for the title insurance. Is that what we're talking about?
We just talked about that.
Yeah. Well, that's what I'm
That
saying.
was a lender's policy and the owner's policy.
Yeah, the CLTA just stands for California Land
Okay.
Title Association, and the ALTA is the American Land Title Association.
Gotcha,
It's
gotcha.
Just Pepsi and Coke.
I want to go back to that quit claim deed. Everybody says it's quick,
Yeah.
but it's quit.
Claim, yeah,
It's-
quit
it's
claim.
quit, yeah.
But that's like the least amount of insurance, right, against the deeds that you have. Like the warranty deed is the most prominent, right? It's the one that's the strongest, covers
it
all the
actually-
covenants.
They just vary from region. Like depending on where you're at in the United States is what the document they use for that particular one. And we actually use a grant bargain sale deed here. And a warranty deed is a little bit more central, like New Mexico, Colorado, Texas. They use the warranty, and then the further you get east, then they'll use. They name them a couple of different other things. Conveying deed. It gets a little. It's like pretty.
Yeah.
limited.
So how would you advise somebody that's buying a property as a primary residence, right? They put it under their name because it has to be under their name. They couldn't put it under some sort of trust or an LLC because the lender requires it. Typically after 90 days, they get with an asset protection attorney. They decide, hey, now I want to put it into a living trust or an LLC to protect my assets and my liabilities. They're not going to do that quit claim deed, right? So now do they just come back to you with the extended policy that they purchased through you, and then they do the transfer of title?
They can. Typically, your asset protection or your attorney will handle that conveyance, which is perfectly, legit. As long as it's a reputable, or no, I shouldn't say reputable, I apologize. As long as they're a known attorney, or if they can provide us the documentation of what attorney prepared it, it's usually written on there. Yeah, if we can, verify that it was done by an attorney, then we'll take that.
What is Nevada? Do we normally do general warranty deeds mostly?
No, we do grant bargain sale deeds.
Grant bargain sale deeds.
But it also depending on the seller, because I noticed depending on the bank, like when we were doing REOs, it was actually different
Yes.
depending where that asset manager was too.
Yes.
And you were required to take it like that. But
Yeah.
it's just as good, right?
Yes.
And plus you got title insurance policy anyway. So, I wouldn't worry about that. So the other thing I want to get into is how to take title to a property. And this is one of the questions I get all the time. Okay. Escrow will automatically send over the information, right, to the buyer and say, how would you like to take title, right, to a property, or vesting, let's just say. And I can't advise them on how to vest in title because I'm not an attorney. But it seems like to me that the escrow officer automatically routes to a certain type of vesting that they always go with. Can you explain the difference between the way that they invest in title, and how should buyers look at this, and how should they take on title to a property?
Yeah, I'll take that one too. So basically us or the notary, the vesting instruction is very specific. It's, we did that so that it's not confusing.
Yeah.
We kind of asked them their intent. Husband and wife, we look at your deed of trust if there's a loan, and if it says on there husband and wife, we let them know joint tenancy is going to be the right of survivorship. So if anything were to happen to one or the other, their surviving spouse would be 100% owner, no probate would be required. That's typically your husband and wife's preference.
Okay. Did you say that was joint tenancy with rights of survivorship? I'm sorry.
Joint tenants.
Joint tenants. Okay.
With rights of
Joint
survivorship.
tenants gives you automatic right of survivorship.
You don't even have to say right of survivorship because joint tenants.
Okay, gotcha.
How many people can be on joint tenants?
Actually, you can hold it multiple people.
Yeah,
but
like more than one, like two, right?
Yeah,
it could be like
together
3
as
or more,
joint
right?
tenants. Yeah.
But you can't subdivide the interest, right? It would have to be equally dispersed. If one person dies, then the other two would get 50-50 at that point. Is that correct, or correct
Well,
me if
when
I'm wrong?
anybody passes, the surviving tenants just become 100% owners. So until you separate their, break it down by percentage, and that's tenants in common.
Correct.
So you would say like, Julie Cimorelli and Natalie Bradley, married women as tenants in common.
Yeah.
Meaning she wants, and it could be 70% and I could have 30.
And that's passed through will, right? So if something happens, like if there's a will put in on tenants in common, I'm just curious. I'm asking because I'm curious. So if something happens. Let's say I own 40%, and through will, is it passed to somebody in their family?
Well,
is that how it
if
works?
It's just a will. Your 40% would be probated unless it was specific of who that's going to. We wouldn't
Unless you had a
assume.
trust or something
Yes.
like that. It was spelled out. Because I don't
But
think
then you
wills.
would need to hold title in your
Yeah.
trust.
Title.
So basically, you would get your 40%, and however you will your 40%, and that's where it would actually go. Then basically,
I see.
Yeah.
So the only time, and correct me if I'm wrong, for tenants in common would be more for investors. Is that correct? If two parties joined on an venture, on a investment deal.
Because they would want their portion.
Correct.
So like if Natalie and I went into a partnership, maybe we would want it to be tenants in common because we have separate heirs. Sometimes we would see husband and wife take as tenants in common. Maybe it's a second marriage, children, they have separate children from their previous, and they would want it to force a sale to split that way. But then you are going to have probate. So.
Yeah.
Now this is a community property estate. You want to explain that?
Yes, community property. So if you buy a home unmarried and you get married, it's still not just your property. Once you get married, your spouse has interest, assumed interest. Okay. So you have to bring to the table the spouse and either have them sign off on a deed or join you in executing the deed when you sell it. It's they don't just go away.
Gotcha.
Now there's times where we've done deals together.
Yeah.
Where one spouse can't go into loan, but they have to relinquish their ownership or to put themselves on title. You know what I'm talking about?
Yeah.
We did a couple deals like that.
Yeah.
So because this is still a community property estate, even though that they sign off on this, should they decide to sell it later on, is she still required or entitled to half of that still? And does she still have to sign off on that in order to sell that property as well still?
We require a newly executed spousal deed if we go over 12 months.
Yeah.
It's sometimes even 6 months. It's a managed or a underwriting call because we don't know if they commingled money and maybe she went down and paid the taxes or maybe, they have a joint checking account. It's how they make their monthly mortgage. And so we can't assume she didn't have interest during that time. And even if the divorce decree spells something out or, there's so many things that have to be considered when that happens.
So as long as she commingles the funds and makes the payment, now she's reattached to the property. The shitty part about this is the guy holds on to the note, but she's entitled to half of it. Am I correct?
You got that.
Ooh,
He's
see,
liable,
ladies,
he's liable
ladies,
for the debt. But
ladies,
she gets half the assets.
Lady, I just gave you a tip right there. See, that's what you got to do right there.
Right?
Everybody's giving a thumbs up in your comments.
Yeah, that's how we do it. Did you have any questions, Dan?
No, I think you guys answered a lot of my stuff. A lot of things that I had concern on.
Can I just say, I just had a recent, and actually it didn't close. So we have a lot of people, and through COVID and everything, relocating, people working from home, and we're just, everybody wants to move to Vegas, right? So we had a transaction where a gentleman is from Tennessee, and it's not a community property state. He can buy and sell property without his wife's signature. So he came here and put an offer, got a loan, and just put his name on the contract.
Yeah.
And then the lender was alerted that he was married. And of course, we're a state of Nevada. We want a spousal deed. And he's very upset because he buys and sells properties back at home in Tennessee. And
How long you guys
What
been
are
in
we
the
doing?
game here with
Yeah.
real estate? I mean, with You guys been doing this a while, right? Title.
Yes.
A little minute,
Yeah.
yeah. 27
Years
27-ish
plus?
years, yeah.
30.
Is it
30
what's the, like, I know people think like, man, it's a great job, but a lot of people that are in title, it takes time to get set up. But once you're set up, it doesn't seem like many people want to leave.
Yeah.
You know?
I know.
Yeah.
I see the
great.
same title reps 20
Yeah.
years ago.
Yeah.
You know what I mean?
Yeah.
It's such a learned field. I mean, there's every day we're learning, and
Yeah.
you don't graduate with a degree in title. So it's, even if you have marketing degrees or
Yeah.
business degrees, it's really hands-on with this. And yeah.
And what do you
worked
guys
our way up?
What do you guys see going on with the housing market right now?
Golly.
Besides, it's crazy busy.
It's nuts right now.
I'm gonna let you take
inventory.
that.
Yeah. Goodness, it's just multiple offers. We're hearing it from all the agents. It's we're getting just flooded with California buyers. It's an incredible time to sell, and it's still an incredible time to buy, because get asked that question every day. Oh, do I wait? Do I sell now? Do I? I'd say it's great on both sides. Right, the rates are unbelievable, and they're looking.
Rates are
going
going to stay the same.
Yeah.
The thing that's going to keep this market going is rates are going to not go anywhere. They're going to go up maybe a little bit. They're not going to go anywhere. They can't. Government has, figured out a way to keep rates low. I'm not going to go into details. So it just means that if there's low inventory and rates are good, and you got people moving from out of state consistently to move to a reposition, it's not going to change Vegas too much. Like if it demographic or the location here and where we're at, I think it plays a big part because it's desirable, and I think it's not going to go anywhere. So
are you seeing more escrows now than like 2008?
Oh, I think we had our best December
Yeah.
since 2008, right?
Yes,
We had
absolutely. We hit records almost all of 2020. It was
Yeah.
crazy.
Yeah.
One lull,
Yeah.
like what was it, around April, when everybody was just so unsure, but bounced right back, and it's just been crazy.
Now, this is where I want to get into the financing. What's going on with the financing, Dan? Let's break it down. What's up with the financing?
what's going on, everybody? So anyways, financing, we have a lot of good things going on. We know that we talked about this last week, where February 12th is everybody's going to be, filing their returns. So the whole thing with the COVID, hopefully we're putting a lot of that behind us, because once we do file our tax returns, if you're self-employed, this is primarily for you, obviously.
Yeah.
We only need to get 3 months of, your profit and loss, and just show that the business is stable. A lot of people are self-employed. You get a lot of people that are looking to get a loan. And so, we have everything for you. We can get you done. As far as rates go, like I said, the government's still going to be buying a large sum of mortgage-backed securities and treasuries and things to keep rates suppressed. And so they're going to continue to do that, especially with the economy doing what it's been doing. The unemployment rate is starting to go up, or go down, a little bit, where it's getting better. And so all these things, inflation's in check. I don't foresee that a lot of interest rates, I don't see rates going up anytime soon. I think the market's going to be phenomenal here. I think we're in a beacon. The housing market's a beacon for the U.S. economy. It really is, because I think that's a very strong, it's sector, if you want to call it. And it's just interesting to see, with this vaccine, we talk about this every week, but it's interesting to see what the new regime's going to do. The vaccine, everybody's coming in with the new president and all that. We won't really see anything that's going to come out probably for 6 or 7 months. And then I think you're going to start to see how the economy and GDP's really, gross domestic product's really going to come out and play a role. But I think right now it's kind of being conservative. It's kind of in the preliminary stages, so we're not going to see too much of that. But I do think that rates are going to be very good. They're still good. They're still in the high 2s, low 3s. Interesting, though, you look at this last week, we had some people come out talking about what was going on with Robinhood, right? And a lot of that information, silver, gold, all these things. It's funny how you can manipulate certain things based upon information. Government's doing it with mortgage rates. And it's funny because you got these people that on Reddit, they started manipulating the stock market, right? Buying into GameStop. And so it's interesting. I think all this stuff, there's a lot of data out there. It's interesting to kind of see where all this is going to go. For the foreseeable future, though, our housing market's thriving here. Our rates are great. Mortgage lending, it's always going to be a little bit more restrictive. I think it's starting to ease up a little bit, especially for first time or for self-employed buyers. So I think that we're going to see a nice 2021 all the way into this end of the year, because I don't see any signs of this stopping. Rates are great. Like she's been saying, everything's been great. So think everything's going to just be on steady Eddie, like I've been saying.
Steady Eddie, I like
Steady
that.
Eddie.
Anything else with the financing?
No, I think that, like I said, I mean, there's always new programs and things. I do think that a lot of these programs and a lot of things that's happening, we need to wait and see what's going on with the vaccine that's going to come out. We need to wait and see what the president is going to do and what he's going to unfold and what some of the new laws. There's a lot of stuff that's just kind of,
I mean, obviously the consumer confidence is there. I mean, the vaccine is already starting to take place. Everybody's, starting to make movements. A lot of people are out and buying homes. I mean, I don't think we have to wait until it's completely 100% out there. I mean, people are already making moves, right?
Consumer confidence is up. And the reason why it's up, and you're 100% right, Chuck, piggyback off on that, that's a big part of how this whole thing works.
Yeah.
Inflation, all these things. But consumer confidence is probably probably the biggest, because if you got vaccines and you got stuff, people are willing to go to work. They have trust in the economy. They got trust in what they're doing. Obviously, it's going to play a role. And as this thing keeps unfolding, consumer confidence did go up recently, just slightly. And we all know that that's a big part of what happens with everything, not just rates. If people are going to go back to work, people. So I do think that for the foreseeable future, I think things are going to start to look up. I think things are going to be more positive. There's a lot of states. It's funny because gross domestic product we always talk about that in the economy. New York, I think, is 8% of gross domestic product, and California is 14%. And they're reopening those states, including other states were shut down. So that's going to play a big part in seeing this economy start getting back in full strength.
Gotcha. Hey guys, I just wanted to say thank you so much for tuning into the LV Home Experts radio show. Remember, it's 5 o'clock every Wednesday. And don't forget to visit lvhomeexperts.com. And we talked about this before shopping for a home out here in Las Vegas, Nevada. What you're going to do is click the financing button, come down here. You're going to click the start button. So that way you guys can already get started on the financing with Dan French, the the loan guru, with guarantee rate. It's getting late and it is time to go home. Other than that, thank you so much for tuning in. I'm Krulsawat with Simply Vegas, and have a blessed day, guys.
See ya.